Picture this. You wake up on the morning of your 30th birthday and you suddenly realize you never actually have to work another day in your life. No alarming boss, no grueling commute and rush hour traffic, just total, absolute freedom. Now, most people think you need to win the lottery, inherit a fortune, or invent some crazy viral app to make this happen. But the truth? Actually, scratch that. It's not a secret at all. It literally comes down to a simple, repeatable formula. Welcome to this explainer, where we're going to break down a powerful 7-step playbook to help you take absolute control of your financial destiny before you even hit the big 30. Okay, let's just go ahead and address the giant elephant in the room right away. You're probably wondering, is it really possible to achieve financial freedom before 30? The short answer is an enthusiastic, absolute yes. But here's the catch. It requires completely stripping away all that complex, intimidating Wall Street jargon and just following a really clear defensive playbook. Today, we're going to look at the structured, beginner-friendly approach that transforms an everyday paycheck into serious, lasting wealth. So here is our roadmap for today. We'll kick things off by defining the financial freedom roadmap, then move right into building your financial foundation, and then cover playing financial defense. From there, we shift gears to playing financial offense. And finally, we'll wrap the whole thing up by avoiding common money mistakes. Let's dive into Section 1, the Financial Freedom Roadmap. Because, let's be real, every great journey needs a crystal clear starting point. Before we execute these 7 steps, we have to know exactly what game we're playing. First things first, let's define our core target. Financial freedom isn't necessarily about flying in private jets or buying mega mansions. Though, hey, if that's your thing, go for it. It's simply the state of having structured your savings, your debt, and your investments so that your passive income completely covers your living expenses. It means having total control over your lifestyle choices, whether that's taking a 6-month sabbatical to travel or finally starting that passion business. We are literally talking about buying back your time. This is the exact tangible goal we are targeting today. Moving right along to Section 2, building your financial foundation. Because before we can build a towering skyscraper of wealth, we need a rock-solid floor to stand on, right? And that brings us to Step 1, mastering your savings and budget. I want you to think of a framework like the classic 50-30-20 rule. This is where 50% of your income covers your absolute needs. 30% goes to your wants because you still got to live your life, and a strict 20% is locked away for dedicated savings. Look, without a budget, your money controls you, plain and simple. Setting up automatic transfers so that 20% just magically vanishes into a savings account the very moment you get paid, that is a real-life game changer for this foundational step. Out of sight, out of mind. You can really think of a strict budget as the architectural blueprint for all your future wealth. Your financial foundation dictates exactly how high your wealth can grow. If your lifestyle expenses constantly rise to meet every single pay bump you get, which is a huge trap so many young professionals fall into, your foundation will inevitably crack under the pressure. A highly disciplined budget ensures your floor is strong enough to support the immense weight of the financial freedom you're trying to build. All right, now we enter Section 3, playing financial defense. And here is a hard, unavoidable truth about personal finance. Making a ton of money doesn't matter at all if you don't know how to protect it. This brings us perfectly to our defensive moves. Step 2 is building an emergency fund. We're talking 3 to 6 months of living expenses tucked away safely in a high-yield savings account, completely untouched unless a true crisis hits. Step 3 is implementing debt management. You absolutely must aggressively attack high-interest consumer debt. Think about it. Carrying a $5,000 credit card balance at a 25% interest rate will silently drain your wealth way, way faster than any investment can grow it. It's like trying to fill a bucket that has a massive hole in the bottom. There is a massive, and I mean massive, psychological difference between these two forces. An emergency fund gives you supreme peace of mind. It acts as a financial shield against life's unexpected curveballs. Unmanaged debt, on the other hand, is literally a wealth-destroying parasite. You simply cannot effectively invest for your future if you are simultaneously paying exorbitant interest rates to a credit card company. The math just completely falls apart. Just a quick check-in here. Remember, we are tracking 7 practical steps today. By locking down that emergency fund and completely conquering your high-interest debt, you are keeping yourself perfectly on track for the remaining steps. You've effectively bulletproofed your finances. Now that your defense is firmly set, it is time to build some real wealth. Welcome to Section 4, playing financial offense. This is where we shift our mindset from just protecting what you have to actively multiplying it. Now we pivot to Step 4, increase your income. Here's the thing. You can only cut your expenses so much, right? But your earning potential, that essentially has no ceiling. This might mean negotiating a 10% raise at your day job, taking on some freelance work on the weekends, or maybe learning a high-income digital skill like copywriting or coding. Once you secure that extra cash flow, you funnel it directly into step 5, master beginner investing. This is the fun part. This is where you buy assets that put your money to work for you even while you're fast asleep. But hey, before we go any further into the investing side of things, we absolutely must highlight this crucial pillar of financial education. As our source material explicitly states, investing involves risk. There are no guaranteed returns, and examples are for educational purposes only. The stock market fluctuates, and it is vital to impartially understand that risk is an inherent, unavoidable part of the process. We are analyzing the mechanics here, not making any guarantees.
So the real secret here isn't trying to time the market. It's time in the market. You start investing early, then compound growth activates. This is that magical phenomenon where your earned interest starts earning its own interest. In fact, based on historical market averages and utilizing something called the Rule of 72, money invested wisely can potentially double every 7 to 10 years. To put that into perspective, by starting in your 20s, your wealth doesn't just grow in a straight line, it accelerates exponentially over time. It's like a snowball rolling down a really long hill.
But, and this is a big but, this entire system can collapse if you aren't careful. That brings us to Section 5, avoiding common money mistakes. It's time to look out for the worst potholes on this road to early financial freedom. This brings us right to step 6 of our journey, recognizing and actively avoiding these common financial pitfalls. Ignoring debt allows interest to violently compound against you. Skipping the emergency fund forces you to take on new terrible debt when a crisis inevitably hits. Delaying your investments, that robs you of your single greatest asset, which is time. And overspending your income increases what the experts call lifestyle creep, keeps you trapped on the hamster wheel no matter how high your salary actually goes. Tying these all back to our earlier steps, you can easily see how ignoring your foundation completely ruins the entire structure.
And finally, we have reached the summit. Step 7, consistency ties it all together. Look, you can build a flawless, spreadsheet-perfect budget, and you can set up a brilliant investment account. But the real underlying secret to hitting financial freedom before 30, it's repeating those good habits without fail, month after month, year after year. Automation is your absolute best friend here. If you are consistently saving, consistently avoiding bad debt, and consistently investing, the mechanics of wealth building are virtually destined to work in your favor over the long haul. It really is that simple.
So, I want to leave you with this final provocative question. Are you ready to start your 7-step journey to financial freedom today? The roadmap is entirely laid out in front of you, drawn directly from proven personal finance principles. The choice to actually take that very first step, however, is entirely yours. If you found this explainer helpful in mapping out your financial future, make sure to like, comment, share, and subscribe to the channel so you never miss out as we continue to unpack the mechanics of wealth. Start building that foundation today.